Good afternoon. Good afternoon, everyone. This is Bag of Don, Stock Market Caddy. It is January 29th at about 1:30. And we're going to put this interval back to a 5-minute interval. And I'll tell you what we're doing here and why we're doing it. And, when you have these tools on your desktop, you get to play your game. And I certainly get to play mine. And I'll tell you, we did something a little bit different because of the significant punch up that we had on Monday. But so we don't ordinarily play this way week in, week out, but every once in a while you get the opportunity. So I'll explain that in a moment. I'm trying to, yeah, here we go. Get this set up here. I'm going to drop this down to a 5-minute interval for folks that are patching in. Today is Fed Day, and I think we know pretty much what the Fed's going to do. They ain't going to do jack shit. They're not going to do nothing. They should be jacking rates. They're not going to do that either. No, they're not. But let's get this punched up, and they're going to sit tight, and then they're going to say, "Yeah, and we're going to be data dependent." Yeah, 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 yeah. It's just another day, but it does draw in a lot of noise, a lot of usually a little volatility, and we'll address what we expect, and then we'll see how it plays out. As always, there's it flies, it dies. How you doing? We've been really busy, and I'm sorry. I tried, almost for the whole month of January to try to punch up, and it's a good thing, right? But the market volatility is awesome. We're very, very busy with our own trading. We're also very, very busy with Q schools, and we're booking them now, weeks and months out. I'll address that with folks. So we're gonna, at minimum, I hope to punch up on Wednesdays midday. Today happens to be a Fed day, so why not? I'm a little late even, and it's just so difficult. It's just Susan and I, and we continue. We've been growing at about a 50% clip for the last, like 5 years. So it's really grown, and in our and so and our own trading responsibilities have too. So in any case, we'll do the best we can. If you push the notification button and it flies, it dies, must have. So when we punch up, he's like, boom, he knows, and that's how that works. And so we'll be back in a little bit, and we'll all get to watch this and um, and chat about it. Joy, we'll be back. Okay, good afternoon. Good afternoon, everyone. This is Bag it on at Stock Market Caddy, and today is a Fed day. Um, it's really, you know, I hope everyone knows there isn't anybody more cynical about the Federal Reserve and all this hocus pocus bullshit, but that's why we do what we do. But it does create a little bit of volatility. Bear with me here a minute. Just trying to get a view on something. Hmm, there we are. So it is January 29th at 1:50. And what are you looking at here? You're looking at a live view. Now we did something rather unorthodox for us. Um, Starting really the on Friday and then carried into Monday, and then where are we? All right. So this is the deal. On I can erase this. On last week, we were running the 5 minute NQ, and we had modest profits for the week going into Friday. And on Friday, or at least the overnight session, as I remember, I don't have my scorecard right in front of me, but we had drawn down about 17, $1,800. And I was discussing, if you go back and listen to the live session on Friday, you'll hear me describing, and I didn't expect to, but I ended up keeping the live view up all afternoon. And what I was trying to communicate is the importance of understanding what it is you're trying to do and accomplish. And you need to understand the market that you're trading, the interval that you're trading, the strategy you're trading. And we use the models to help us set our expectations. The back tests of the models are not a guarantee of what you're going to do or what I'm going to do or what anyone is going to do in the future. They're models. So the trending strategy on the 5 minute NQ, this guy right here, right? And yes, if you took it short this morning at 750, if that was the first time you had come in and you had come in with a mini, yes, you would be up $3,350. Um, Now that model, that 5 minute model, we know what the average winning trade is. It's 2,000 bucks. The average losing trade is 480, 480. And you might be thinking, well, I like that. That's what I want to do. Yep. But guess what the win loss ratio is? The win loss ratio is 33%. It means that psychologically, and this is where most new, young, un, retail traders don't understand. That means out of 10 trades, the likelihood is you're going to lose on 7 out of 10. And that is where the young trader, the novice trader, that just blows their mind because they're trying to win. Now, I don't think it's if it flies and he dies, and maybe not Julian here, may not be you guys, but it may be others because they want to win. It makes them feel good. The problem is if you do what I was discussing on Friday, I said, sure, we could do that, and and I could have clipped it off, but if I'm always clipping it off, I won't get the average winner. And I'm looking to get the positive outlier. I was trying to get not just 2,000, but maybe have a shot at 4,000, 5,000, 6,000. And I actually verbalized that on Friday afternoon. So we got up to about 2,000 thereabouts, and it got to be Friday afternoon. And now comes the decision. It was a profitable week, but marginal. What are we going to do for the weekend? So I decided to carry it. I had the firepower. It was going to require more margin, $24,000 a margin, but we had plenty of margin. And about 30 some odd, maybe 30,100, something like that. That's in the 60 minute NQ, the hourly NQ had gone short at 3 o'clock on Friday afternoon. So we kept it. We kept it. And you know what happened on Sunday night? Ba boom, down we go. And we were up. I want you to know we were up our high water mark overnight on Monday of this week was $24,000. That was the high water mark. We we banked in the morning before the bounce. No, we didn't play it till the long side. We banked um I want to say about I think it was 18,200. So we had basically just two or three trades since Friday. Now, I'm not going to get into detail here on YouTube, but I do with our members that go through Q School. And I have something called the 5-5 or the five plan. It's the 5-5-5-5-5 plan. There's five fives. I'm not going to tell you what it is, but it's one of the first things that I share with everybody in Q School because it can be adopted and you can start doing it yourself. We are going to exceed, no matter what happens today with the Fed, I am over my plan. I'm overachieving my plan. Have I captured the high water mark? No, not yet. Not yet. But because we're so far over my 5-5-5 plan, I'm like really over it. I decided not to work so hard. Bag was feeling a little bit lazy. Actually, I got a little bit of a chest cold. But and not it didn't come it isn't a question of feeling lazy, but I decided that we would come in, get short again, and that's what you're seeing, and ride through the chop of the Federal Reserve chop. What normally happens, let me spit this out real fast and we'll see how this plays out. What normally happens in front of the Fed, if we get now, I don't think the sell-off on Sunday and Monday had anything to do with the Chinese bullshit. Okay, I think that was total bullshit. I don't think it had anything to do with it. I think it's got everything to do with interest rates, and it was overdone, and it needed to come in, and it came in really, really hard. And that's what these markets, are prone to do. Then what we do is we then get the inside day with a bounce going into the Fed. And the Fed's going to come out and they're not going to cut. And they're going to talk up the market and they're going to talk up the economy and they're going to do what the Fed speak usually does. I wouldn't be surprised that the first reaction is a little bit of a bounce. I don't expect the market to take out the lows of Monday today. I don't. I don't think so. It would be, if it does, it'll be a little abnormal. For the last 15 years, they've been protecting the Federal Reserve like the hedgies. I mean, it's their, their, oh, how would you put it? It's the queen bee, right? If the hedge funds are the hornets or the bees, the Federal Reserve is the titular head of a banking cartel. It's their queen bee, and they work in concert with each other. But I would be surprised. I would be surprised if we go into this coming weekend, tomorrow, Thursday, and Friday, and if we haven't taken out those lows from Monday. That's what I think. And we can go after the Fed and take a look at why that is, but I don't want to change that view. But technically, we weren't surprised. I showed everybody on Friday, the few that were here, and because Bagger isn't showing his cleavage, there's 5 or 6 people here. Of course, if I was an influence girl and had my cleavage showing, we'd have like, 50,000. It's ridiculous, isn't it? Oh my God. But in any case, those young pups, they'll learn. Um, the on Friday, we talked. What did we have? We had a low VIX on a daily basis. Not panic low, but pretty low. We had a very high skew, a ridiculously high, maybe an all-time high skew on the S&P, and it's still very, very high. And we know and explain what that means. Again, we've done it here, but we also do it during the Q School. So it was a pretty safe bet because somebody might say, well, Bagger, you carried it and you could have been, and so here it's going to be coming out here in a few minutes. We're going to leave it on a 5-minute interval, right? Um, And whatever it does, this 5 minute will catch it one way or the other. Now we may have to, if I see my weekly plan being threatened, and I'm not going to tell you what it is now, I may close that trade. I might. Otherwise, I'll try to let it go. I'd like to still be in. I'd still like to be short this market going into Friday. Now we are short this market with other instruments too, namely here it comes, and the Federal Reserve has passed. The Federal Reserve is not going to cut interest rates. We are data dependent. We see really good bullshit in the economy, and we'll be back, next month. I mean, it's lunacy, right? Now, this is the thing of what I'm doing. If you are a brand new trader, okay, you are not going to be able to do what I did, right? Um, because you are going to make decisions based on that money, right? Now, I was to the good, I was to the good for this week, $18,000. I have wood in the trade. Not only do I have wood in the trade, I have experience, I have confidence that I've worked extremely hard to get, and I have the tools at my fingertips to manage my money around a weekly objective. This is a weekly objective that I'm trying to do. Okay. So I don't want to, um, now, can you do it over time? Yes, you can. And we have folks that we've taught and have gone on to do fantastic things. Um, but they work very, very hard at it. They're very, very patient. They're very, very disciplined. And you have to, in our view, start small and incremental. Because this futures contract on the NQ at this hour is using $2,400 a margin, 2,400. On the after hours, it's using $24,000, right? Now, it is not a good idea that you trade a mini contract with a $5,000 account. You would be over leveraged and and you would do very serious damage to that little account. It's one of the biggest mistakes that new traders make. They over leverage small accounts. The good news is you can trade as small as a micro, which would be 1/10 the size. So if you took this trade here at 750, the amount of margin you would have needed for a mini contract would have been 24 grand at 750. A micro would have been 2,400, but at 9 o'clock, you would have only needed $240. You wouldn't be up 4,000, you would be up 400 as an example. But the what we have to go through during the Q school is getting away from making decisions based on the money. You live your life, unfortunately, as Americans or any place, they condition us to do everything based on money. The money, the way that we trade, money is a byproduct. We're trading technically, we're trading mechanically, and we're using robots to assist that trading. And and we will spend quite a bit of time trying to get what we do. It isn't a question that, and it can be done. The first step of learning anything is becoming aware of something you don't know. That's the first step. So we will make you aware of some things, maybe some things about yourself that you never really realized. That once you become aware of those things, then we have tools, specific tools, not, I'm not a psychiatrist, right? I'm not. Um, but we have specific tools for you to be able to implement. And you either implement them and reward that behavior or you don't, you know. But I just wanted to make sure that I explained because, I don't ordinarily, suffer a 5,000. We had to dry down seven, $8,000, but that's because we had $18,000 in wood, from Monday, right? So I could afford to do it, and I'm well over my weekly plans. So I will when I get now I don't get reckless. I don't. I'm still disciplined. I still know what I'm doing, but when I have significant wood in the trade, for the week, I will maybe loosen my grip a little bit, right? And so to equate it on the golf course, you're playing golf with, your foursome, and if you're up a whole bunch, right? I mean, you got, five or six shots on the guy. Well, you know what? And it's on the second day, maybe you will go for try to hit that par five with two, and get on in two, and try to get the eagle and really step on him. Now but I didn't add leverage, right? I didn't. I just got more patient with the leverage that I had and said, I'll suffer a draw. Does that make sense? I hope so. Um, this is trading is meant to be flexible. It's meant to be fun. It should be something you enjoy. It's uncertain. You need to be able to embrace uncertainty because I don't know the outcome. I don't know what the market's going to do, over the next couple of hours, the next couple of days. I do know that our systems, and Swing Machine is just one, won't miss it. I mean, it's impossible. It's impossible. We have so many other systems. It's impossible for the market to get past us. It just is. What's difficult is to believe your lying eyes. you know. And I don't have a TV in the office. And I don't subscribe to the Wall Street Journal or the IBD or do any of that nonsense. It's just, unless you're going to be investing in something that you plan on holding for over a year, 2 years, 3 years, 5 years, 10 years. Then on investments, we will use a little fundamental analysis, but we'll use a lot of our technicals. All right, so let's nose around here. So we're fine. The NQ on a 5 minute is short, and we've been on that trade since really since Monday. I think it's been Monday, right? I forget. We weren't able to punch up yesterday. So yesterday we didn't we didn't intraday trade to speak of yesterday at all here. We didn't, and so that's yeah. So when we put that trade on our account, I just wanted to show you on the account, was at about 45, 46,000. We started with a beginning balance of approximately 30,000. However, the high watermark overnight, the account got to 54,000. Yeah. So we don't get the very top. We don't get the very low. You don't. When you're trading low, you don't get, that's just realistic. You just don't get the very high and the very top. Every once in a while you might, but not usually. And you're usually leaving money on the table. So you have to let me know. What did the Fed do? They didn't do shit. Are they holding a presser today? Oh my God. Federal Reserve. It's a joke. Considering today that we have AI and all this, programmability and algorithms and everything else. I mean, you know, I don't think the Federal Reserve is going to be here in 5 years from now. In fact, maybe Trump's going to blow the thing up in another year. It's a joke. It's an absolute joke. It's supposed to be apolitical and it's anything but political. And you know it, I know it. Um, do you know that back more than well, I got to make sure that we may have folks following that are quite young. Um, that prior to 2008, if you so much as even talked about the Federal Reserve, you were considered, tinfoil hat stuff. You were you believed in, black helicopters and drones and whatnot, right? Little do we know, many of these conspiracies, now. I mean, you probably believe that COVID came from, Wuhan, China. Oh yeah, it did. Oh, okay, but that was the case prior to 2008. The Federal Reserve, yeah, you just if anyone talked about it, you were cuckoo. The guy Art Cashin, God rest his soul, he passed away not too long ago. Seemed like very, very nice grandfatherly figure. He's been on Wall Street since the Pope was a cadet, and when they talked, there was a guy in 2008. His name was Scott Nate. I have the video. If you go back and watch it, they probably have scrubbed it. His name was Scott Nations. I remember this, and he worked for Nations Bank. And what we were seeing in '08, when the market actually, yeah, '08, the market had cracked, and we were seeing like these vicious rallies, right? It was obviously intervention, and it was the beginning, of what that was called the plunge protection team, right? The PBT. And he mentioned it on TV. He actually mentioned the words the plunge protection team. Oh, Jesus. When he said that, I mean, well, one, I damn near fell out of my chair. We heard, I think it probably still, was catching a little bit of CNBC, the Contrary News Bubble channel. But when he did that, if you see the video, none other than Becky Not Too Quick. By the way, her husband was a producer on that show, right? She's a Rutgers grad. Nothing against Rutgers, but she's as dumb as a box of rocks. Um, she had to say, well, I just want everyone to know that Scott Nations just mentioned the plunge protection team, and we neither endorse it or concur with that it even exists. I mean, come on, sweetie. And then Joe Bag of Donuts, Joe Kernan, nice enough guy. He flunked out of broker school at Merrill Lynch and got a job with the cable station and hung out there for the last 30 years. He's also not too much. And then, but Art Cashin, I remember specifically, he said, "Oh, come on, Joe. Anybody who mentions the plunge protection team, that's a load of crap." And then Joe's asking him, "What do you mean, Art? Are you telling me that that's a tinfoil hat and a black helicopter?" That's exactly what I'm saying. That is a load of crap, Joe. Anybody who thinks the Federal Reserve is in here buying the S&P or the futures contracts and playing in these markets, that's a load of crap. It's just them. They got on the wrong side of the market. They got it wrong. And then they just can't admit it, and that's all they want to do. Okay, so we can discuss where the PPT came from, but that was the first reference that I can recall ever coming out of CNBC. Well, what a load of crap that all turned out to be, right? We go from that to where we are today, where the Federal Reserve is, on everyone's, fingertips and not speed dial, but and that the Federal Reserve is all powerful and has everything in check, and the Fed put, and of course the Fed put was around back in the 90s under Greenspan, but you know and today, what we'll have is, I mean, they're here all the time. They are the biggest trader. They're the biggest day trader around, for God's sakes. you know I mean, it's to look back and to think back. So anyone who hasn't been around, it didn't know back then, I mean, that's where it came from. And of course then, what did we find out, a couple of years later? Now we noticed this immediately in March of 2009. And by the way, the markets lifted off all at the same time on March 5th, 6th, of 2009. You could have set your watch to it. I think it was around 3:15, 3:30. They took off and never looked back. There's reasons for that. But um, they were most certainly buying the market. How are they buying the market? They were buying government bonds. No, they didn't have to. You know, they didn't have to buy the S&P futures. All they had to do was buy government bonds. and that pushed the liquidity in. What a, it was so ludicrous. You know, it reminded me of Greenspan when Greenspan was asked if he holds any individual stocks. This was in the 90s. And he said no, by charter and by law, the chairman of the Federal Reserve is not allowed to own any stock or trade any stock, but he can trade currencies. How would you like to be the Federal Reserve chairman and being able to trade the dollar? Do you think you could have made a few big fat trades to set you, your wife, and your family up for generations to come? Oh my God. Any case, Fed Day. Mm, it's it's so, but of course, you could go into any even today, even today, you could go into any football stadium on any given Saturday and or in the Super Bowl and ask 10 people, what is the Federal Reserve? Where did it come from? What does it do? Or even ask them what the value of the dollar is. And you will get a look you know, like you are from Mars. I mean, they just don't have a friggin' clue. And they will work their entire lives to collect these things called dollars and never understand the control over their lives, but whatever. you know, it is, and I'm happy to answer any questions. I'm happy to have an intellectual debate too. Anybody wants to get into it, I'm happy to do that. I mean, it is what it is. I don't think it'll be around in 5 years. I doubt it. I doubt it, but maybe, Um, by the way, there is in the Treasury Department, they went there once during, it was in 2009 when the markets were very, very sketchy, and they brought a camera in. There is a war room. They call it the war room, the financial, well, they call it the markets room, the markets room. It's in the basement of the Treasury. And there's a bunch of guys with computers. Now, the guys said, like, oh, they're not trading. They're not trading, but they got every CEO, every hedge fund, from Ackerman and everything on speed dial. So no, they don't have to trade. All they have to do is just pass the information on. That opens up at about 4 a.m. So I'm many times asked, when does trading begin? It doesn't begin at 9:30, folks. It begins at about 2, 3 o'clock in the morning when Europe opens, and our trading really gets underway at about 4 a.m. Um, if you didn't know. So we're going to go in and take a look why Bagger, stayed put here and sat on this. Certainly had wood in the trade, but technically these markets are in big trouble. Big, big trouble. Please go back on January 9th. If you haven't seen it, we will do it periodically, but I made a YouTube video on the yield curve. Please go back and watch that. Go back. And that's all you have to know. That's all you have to know. That's all you have, because in the end, at the end of the day, the only thing the Federal Reserve can control, which only thing, pretty damn important, is interest rates, short-term interest rates. They really don't have much control. They tried. They did something called Operation Twist to control the long end of the curve, but they got a little less control over the long end of the curve. They got a lot of control. I mean, I'm not saying they don't. I'm not saying that they're insignificant. They got a lot of control, but they don't have complete control. No, they don't. And they're going to be tested, and these markets are going to be tested like you've never seen before. Um, by the way, the plunge protection team, does anybody know where it came from? Have you ever heard of it before? Do you know where it came from and when it was founded and what it was meant to do and what it's become? Oh, wait a few seconds. You're on about a 30, 40-second delay. Anybody know? It exists. It most definitely does. You're probably going to Google it. Okay, so somebody's going to Google it. Couple of things. In 1981, there was a guy rolling into president, and we were saying goodbye to Jimmy Carter. What a friggin' disaster he was, right? Oh God, yeah. Gave away the Panama Canal for a buck, blew up the East on us that we were paying for years, and but he built a few houses, Habitat. He left us a shitstorm. He left Reagan a shitstorm. Reagan got the hostages back before he was even sworn in, by the way, the Iranian hostage crisis. We had an energy crisis under Carter. He was just a peanut farmer, right? He was. He was it's a toss up between Biden and in my lifetime between Biden and Carter. I think Biden takes the cake. I think Biden, has gotta I think he's gonna gotta go down as worse than Carter. But Reagan came in 1981, and one of the things that was going on in the markets was that if a company bought back its shares, it was illegal. Right? Before 1981, company that bought back its shares was manipulating its stock price, and it was illegal to do. Because see, if you let's say you're in the C-suite, right? And you got a little company, is being publicly traded, and the board or your C-suite guys say, hey, Julian, I'll pick on Julian. I can see his first name. Hey, Julian, we can spend, $100 million and build ourselves a plant out there in wherever, China, let's say Michigan, and or and then there's got all the decision. Well, what about the economy? What about the pay? What about yada yada? Or, well, we can take that 100 million and we can buy back our shares. What would that do? Well, guys, that would reduce the number of shares outstanding, and we could juice the price to earnings ratio, reduce the number of shares, make our shares more attractive to the investment. Oh, that'd be really nice. Well, maybe before we do that, maybe we should issue some stock options to all of ourselves, right? So we can, before the stock goes from like $10 to, 500, let's issue some stock options, where you can exercise them over the next, 5 years at $10. And in 5 years, I don't know where the hell the company is going to be. Hopefully it'll still be here, but the shares will be, and we'll be able to walk out of here with, 10 or 15, 20 million. That sound like a good plan? Yeah, let's do it. I get news for you. I'm doing it. I'm not doing it, right? I wasn't in that position, but I would have done it in a heartbeat. You would have too, presumably, right? That's what it, and so you couldn't do that though before 1981, but Reagan changed it so that they could. So now they did do that a little bit, but you can't do that if interest rates if short-term interest rates are historically right about where they are actually, at about 4%. It's it's a little tricky to do because it's still the short-term money. You still gotta, pay for the money. But if interest rates are at like, 0.05 or locked down to 1% where the Fed had them locked down, I mean, since '08, I mean, you are an absolute fool not to do it. I mean, that is lunacy not to do it. I mean, it would be, business malfeasance not to do it, right? And that was the case after '09. I mean, the Federal Reserve was buying the bonds and pushing the interest rates down. So they encouraged, not only encouraged, I mean, they had almost commanded the companies to buy back their shares. And what does that do? It juices the stock market. And there are books written about this. They don't use the words today, but back in '09 and 2010, the Fed readily used the words called animal spirits. Had to create animal spirits. Had to get everybody, let's get going, right? Crypto has animal spirits. We're all going to get rich. We're all going to get rich. No, you're not. No, you're not. Some are. Some are going to get rich, but most aren't. Nope. No, the ones who got there early, it's like the old story about, being out on the Serengeti plain, the ones who find the animals who find the oasis first, they get to quench their thirst and move on. The animals who come to the oasis, late, they usually they might get a sip, they might get a little drink, right? But then they get eaten by the lions. They're little because the lions are sitting there waiting for them. You got to be early. You know, your timing's got to be good. That's another thing, right? CNBC will tell you you can't time the market. No, you don't think so? Oh, okay, sure. Why would you listen to Joe Bag of Donuts and Becky Not Too Quick? Can't time the market. They can't time the market. No, they can't. They still can't. They're morons, right? They're on basically a cable. They might as well be working for the home shopping network over in St. Petersburg, right? And in fact, the Fed guru at CNBC, Steve Weisman, he's probably talking today. Happy FOMC day. That's what we're talking about. FOMC. Yeah. Um, oh God, a joke. It used to bother me, right? It used to, 20 something years ago, 25 years ago, it used to bother me. It doesn't bother me anymore. Not at all, because they don't have control over my life. No, they got control over everyone else's life, but not mine. No, they don't. Mm. But those guys just go to work for, basically a cable station in northern New Jersey, and they appoint Steve Weisman to be the Fed expert. I'm a little jaded with him because I like to fly fish, and the son of a bitch gets to go out every last weekend of August out to Wyoming and eat great steak and go fly fishing with them, with the hoi polloi out there. And it kind of, I mean, I'd love to be out there. It's probably $1,000 a day at least that time of the year. But Steve Weisman, why I bring up St. Petersburg and I think of Steve Weisman, is Steve Weisman was in Russia. I think it was Pravda, one of the in Russia. He's a communist. He's a liberal communist. And but before that, he was I think he didn't even work for the Tampa Tribune. He worked for the St. Pete Times. And I think he was on the Lost Dog, report or something. I mean, that was him. That was his job. Look up his career thing. I'm sure it's glazed over. And then he went to Russia for like 10 years, and then he came back and they plugged him in on CNBC, and now he's the Fed expert, that you listen to. And there will be millions of people that will listen to this guy. And also, I'm sure he's a nice enough guy, if you want to have a beer with him or something. I wouldn't, but but that's who people will be listening to today. And I'm happy to give you a view. You kind of want to know, right? You want to know, like, I know what you want to know. You want to know where the hell these things are going and what the risk is. Well, I can't tell you definitively where they're going to go, right? And give you and set your clock to it and give you a free no risk trade. Nobody can do that, but I can outline the risk to you and give you a picture that is going to probably be very chilling to you, especially if you're like 30 or 40, maybe early 50s, maybe even older, and you got all this retirement money socked away in the S&P and in this NASDAQ. You got some risk. I'm sorry, you may have a little bit more than you realize, and I'm going to show you in a few short minutes. But so the plunge protection team, um, when Reagan came in 1981, he he allowed they they enabled passed laws so they could buy back their shares. But he also formed something called the Plunge Protection Team, the PPT. And like every government entity, it started with like about 15 to 20 people, and they had pagers. And the idea behind the PPT was that if the markets were to get into trouble for some reason over the weekend or at night, whatever it might be, that the president could rely, maybe the treasurer, Secretary of the Treasury, could rely on this PPT team made up of a bunch of traders and Wall Street, crooks, and be prepared to come in and hose down the volatility, right? That's one of the things that, I think is maybe misunderstood. That the politicians are not so interested in just enriching individuals or people with high stock prices, but they do like to keep the volatility down because people get nervous and anxious when the volatility is, flying around. So when it started, the PPT had about, maybe 10 to 20 people. Today, they probably got a couple of thousand or maybe more, like everything. And the PPT is active every single day, every single day, not just when the market is all the time. It's become part of it. And and if that discourages you, well, I get it. Don't think about it too much. Um, it used to bother me years and years ago. But I finally sat down with Susan and I said, well, Susie, the markets are rigged. I don't like it. I wish they weren't, but there's no changing that. And we're never going to be on the inside. We're not in the club, as George Carlin said. We're not in the club, and you're not in it either, presumably. And so all we have to do is throttle back our greed, throttle back our fear, take control over our own destiny, and stay on the side of the market that's rigged. If they're taking the bitch up, we go long. If they're taking the bitch down, we go short. Now, when you think about the interval, you got to think about whatever and they're all the markets are rigged, right? I mean, the oil markets, the nat gas, I'm sorry, crypto, they're all rigged. They're all rigged. It's always been this way. It's the way of the world. Um, so you have to think about what market you're entering. You got to get really, really intimate with those markets, and um, and then you got to decide how how on what interval you want to trade, right? So we're all about trading to extract cash flow. So intraday, we trade futures. Why? Well, one, they're very, very liquid. Liquidity, liquidity is the most important thing to a trader. And I don't care if you're trading houses, trading cars, trading baseball cards, trading antique furniture. I'm hearing that antique furniture is like in the hopper. It's not doing well, right? 20 years ago, 25 years ago, there are these stories about like an antique chest or drawers, from your grandfather, your grandmother that you may have inherited, could have been selling for 20, 25,000. Today, it's like 2 or 3 grand because they're not very liquid. There's a very little demand, and they're just not liquid. So you wouldn't want to be buying and selling antique furniture because they're just not liquid. You may get stuck, with a basement full of antique furniture that you can't get rid of. You don't want to be buying and selling houses in a big way or accumulating houses if you plan on, trading them. I mean, if you're going to sit on them and get cash flow from the rents and so forth, that's something different. But if you're speculating on them, or if it's whatever it is, Beanie Babies, um, baseball cards, football cards, or markets. So we like futures because they're highly liquid. It's where the banks play. Less than 9%, less than 9% of the investing public, the trading public, trade futures. So when you watch that Super Bowl in another couple of weeks, and you see all those guys and girls, at least the guys, they'll have their face painted and they'll be, hammered. If there's 100,000 people in there, there's probably, mm, I don't know, I think maybe at most, maybe 10,000 that actively trade their own accounts. I don't know what the numbers would be for sure, but I'm gonna say, probably about 10%. I just don't think it's very high. And of that number, less than 9% will actually be trading futures. Very, very few. Right. So it's 9% of the trading public trade futures. And we trade futures because they're highly liquid. They we have great market access around the clock. Thank you very much. So from Friday afternoon to the open on Sunday night was boom. It was beautiful. And there was little to no chance that it would have gone the other way either, because technically it just wasn't going to happen. It just wasn't. I mean, I could have lost a little bit of money, but I wasn't going to lose 18 grand. There's no way. No, not from where we were. So we described that. But there was a possibility. I was thinking, 4, 5, 6,000, but I didn't think, we were going to get 18, or it could have got as much as 24. So it can happen. Um, we also trade futures because of market access, liquidity, number one, market access, number two. Number three, they're very simple. I mean, well, one, they're also number three, they're leverage. They're leveraged, right? Not ridiculously leveraged. This isn't Forex, 100 to 1, 200 to 1. You got to be careful with those things, because, they'll put you out of business. So they're responsibly leveraged. And the other thing is they're just so simple. We don't have to deal with the Greeks. There's no time decay. There's no theta, there's no gamma. We don't have to really concern ourselves with it. Now we do track the options market, what's going on from a future standpoint, but there's another story. But there's no inherent decay in the products, so it's really, really good. As we go further out, though, when we want to trade going out days or weeks, what are we going to do? So that's why I say it's a little unusual for me to be carrying this one mini, overnight like this. But I got eyes on it. The machine's got eyes on it, but it's not something I usually do. It's something that Susan never does, right? Susan's in cash by noon, 1 o'clock every single day. And that's fine. And she, exploited and had her trades, so it'll be up to you. But when we want to go out days, and normally it's 35 to 45 days, what products are we going to use? We're going to use options. We're going to use options. And the reason why we use options, they're not as liquid. We do have to deal with the Greeks and time decay and all of that. Um, but they're leveraged, and we're using options that where our risk is defined. So we can still define our risk. And that's what we're doing, near term. Now, those options can be zero DTEs. We've been doing those. Zero DTE means you're getting an option for tomorrow. Things going to expire. So either it's red or black. And we've been doing that sort of thing for years. And, of late, they've become really popular, but, we didn't, I don't know, we didn't call them zero DTEs. We just call them short dated options. But we do some of those, but not a lot, really. Very popular with the retail crowd because it's kind of a, I don't know, you know, a singular bet, a Dave Portnoy bet. To see he got his ass kicked. Old Davy boy, Davy day trader. Um, he's done well for himself. He's done well for himself. Yeah, Davy Day Trader grew up in the town next door to me in Swampscott, Massachusetts. Very nice town. Very, very nice town. Very rich town. I grew up next door. I'm a city kid from Lynn, Mass. And but he's done well for himself, but I wouldn't listen to anything he has got to say about markets. He's you know, I mean, he's got a gambler's mentality. We're not gambling. We're not. This isn't gambling. We are playing the probabilities, but we're not gambling, and we're using technology in a big way. Um, I also wanted to, when it comes to options, we're usually 35 to 45 days, and our favorite thing to do with options are spreads. credit credit spreads. Put credit spreads and call credit spreads. And we can put time on our side. If we're going to go for an investment, which I'm not going to invest in this market, because a rising tide will raise all boats and a lowering tide will lower all boats. So this market, I don't know if it's going to be next week. I don't know if it's going to be 3 months from now. I don't know if it's going to be next year, but this market is going to have about a 50% or higher correction to it. And I can't get on anything, that is gonna, weather that sort of thing. Unless it was an IPO or something, and I was, on a friends and family list, then maybe. But so that kind of gives you, I guess, a thumbnail sketch. So they're ripping this back a little bit. He's probably holding a presser and jawboning. Um, if I need to come out of this and I'll finish my week with a decent one, but we're still well above my weekly plan on this one market. So we're fine. Now, if you're trying to, trade here, if you're trying to thread the needle, um, we would be dropping, and during Q school, we do that with you. We would drop these intervals down. We would also drop the leverage down. And we would also probably suggest to you not to trade on Fed Day. Susan does not trade on Fed days. Susan does not trade on an options expiration day, which is almost every Friday, anyways. But certainly on the monthly options, the third Friday of the month, she won't. And if there's a known event that's going to create huge volatility, um, Susie's probably going to sit it out. Because when you're trading mechanically and robotically, you need volatility, but you don't need it to be, obscene. If you are seeing these numbers, I just again want to make sure that we explain what we're doing here. But um, if they look too big to you, like I could never have an $8,000 draw here. Please remember, we have considerable wood in the trade this week, right? So what I mean by that, I have considerable profits, but we've been doing this a long time. Um, but you don't have to be trading a mini in the futures. You could be trading a micro. So, and you can, adjust as you're underway. And we again discuss this during the Q school and brainstorm with you. You don't always have to be using exactly the same leverage. You don't always have to be using exactly the same um, um, interval, right? Where a person gets into trouble is they haven't thought it through. They don't have a weekly plan. They don't have a daily plan. They just want to make money. They have so much money in their account and they just come in and they usually oversize and they just put a singular big fat trade on and invariably it goes against them. And next thing you know, they either out of business or have to put more money in and they didn't learn anything. What the hell was that play, the tush push? What the F was that? That was, I mean, that looked terrible. Yeah, Davey day trader, Dave Portnoy, he wasn't so happy. He put 500,000. He thought he was the cat's meow. He put 500,000 into Trump coin. Ridiculous. 500,000, but he's got 100 million or more, so 500,000 is nothing. So he puts $500,000 into Trump coin, right? And he gets on the social media and he closes it, 30 minutes later um for a million, a net mil, right? That's gambling. That isn't something we're doing, but he's got 100 million. He's a gambler. He could do it on Fartcoin. He could do it on, he could do anything. He could go down to the Indian casino and do it to, and that's what he does. So then he takes his million, then he turns around, he puts it on Buffalo. And I don't watch that stuff. I'm sorry, I don't. I just don't have the time for it. But but I did see his tweet coming across, and he was upset where they marked the ball. And, I mean, can you imagine putting him? I mean, but he's got 100 of them, right? So if you got 100 million, use a million on a football game. No big deal, I guess. But I don't even gamble. I don't. Well, why would I do that? Oh. Why isn't what we're doing gambling? Well, when you go into a casino or a football game, um, they're going to set the rules. Hmm? They may manipulate the rules. Jesus, I mean, a football game, I mean, do you think Kansas City's going to beat Philadelphia? Mm. If the past is prologue, I think Kansas City's going to win. I mean, they get every call going their way. It's been a little bit highlighted right now, so the credibility's on. So the contrarian might say, well, they're gonna have to play it honest. But but when you go into a casino, those are games of chance. And the casino sets up the rules. The casino sets up the odds and the leverage, right? They set all that up. You can't reach into the roulette wheel and stop the spin. You can do that. You can do that here. You can do that here. I mean, I can take my lump on this trade and I'll finish the week up, 8,000, roughly $8,000, which wouldn't be a bad week on one market for the number of trades I've had. I've already had 4 or 5 trades. That would be all right. But I'm gonna try to weather through this choppiness here and try to go to Friday because I think if we revisit the lows, I think that I can see the account. I think I can see the account go to 54, maybe even more, right? If I didn't think there was more, I probably would have taken it earlier. So we'll see. Um, I've been kind of rambling. You got any questions about who we are, what we're about? Don't hesitate. I promise to give you a view. You want to see, like Don, I want to see a little bit more than just swing machine. I want to see the S&P. Now we focus on the S&P because the S&P kind of is the biggest, deepest stock market in the world. And as the S&P goes, so goes just about everything else, usually within a day or two. Now, remember the treasury market, though, the bond market is much, much bigger than the stock market, much, much bigger, many multiples. And I have a sign up in my office if ever you want to trust, a signal um, or trust a market, you want to trust the bonds. The bonds are bigger money, smart, in my view, smarter money, and it's slow, slow. NASDAQ is the crazy ant in the basement. And if you can trade the Nasdaq with success week in, week out, you can trade just about anything. Let's go look. We'll keep an eye on that. Let's go look at the Renko chart. This is on the S&P now. So you guys have seen this, and this is right here um, where we are. So let's take a look. I'm going to mark this up a little bit. And I know everyone loves to see a chart, right? Many of you may not, if you're an options trader, you probably do better at not looking at a chart, right? And you might even do better, working on your algos and not trading so much from a chart. But we can trade from a chart, and let me show you what we see and then what we interpret here. The first thing is that this tool right up here, okay, I didn't write that in. So this is the algo telling us, this is on a Renko chart in the S&P, that it's perceiving this to be up. And it's also perceiving it to be under accumulation. What we see here is, let's get a date here. The dates are not that close. This is right here. This is January 13th, right here. And somebody, could have got short in here, and it would have been okay maybe to be doing that. We'd prefer to be doing it off of resistance. We've shown this before, but what wouldn't be okay is the moment when we came down, if somebody did short here, the moment this came up and over this C point, they should have covered and or as it pulled back, they should have covered. And certainly right here, they should have covered as soon as that showed up. They should have been out of here. If they didn't, they shorted in the hole and they got jammed. And then we run up, we pull back, we get another buy signal, we run up, we pull back, and another buy. And this turned into what we called the pain trade. The pain trade. You know what the pain trade is, right? You short it in the hole. You listen to Joe Bag of Donuts, Becky Not Too Quick, Art Cash. Can't listen to Art anymore because he's on the ground. But um and but by the way, when we were up here, I think we were at market all-time highs. And whenever we get to a market at all-time highs, I always get a little bit nervous because that means that every person who ever even looked at the market, including all the dead people, they're all right because the market's at highs, right? So anyone who ever had an opinion about buying the market, they're all right. And we know that not everybody's all right. So when we were up here, we were signaling signals over noise. We were signaling to our members, monthly members, base members, and our annual members, hey guys, I know the market doesn't look like it wants to go down, but what do we got? We got a low VIX. We got a record high skew. We got a record high skew, and the market is at all-time highs. And the breadth of the market sucks. And you know what? We think we got a really good chance maybe of even gapping down in the next couple of days. So I'm going to stay short over the weekend just in case something goes down. And nothing did go down. But you know what? When they opened up on Sunday, ba-boom, straight down, straight down. And you were either in it or you weren't. Fortunately, we were in it. We don't get every single one, but we got that one. So now we bounce. We bounce. And then this is what happens now. But what happened here? Do you see it? Do you see what happened? Now this is, oops, got the markings here kind of goofed up. Let me clear this up here a little bit. Right here, um, do you see this guy right here? That got taken out. So when the market falls like this, the people who have been buying every day, every month, that's all they do is buy. When the market comes down, they buy. So they see it as a dip. We don't think that's going to be the case, right? We don't, because that got taken out. So this is not a dip, but this is a rip in our view. So we come down and that is a rip. And rips usually should be sold. But down we come, and this guy would have been right in our view. And in fact, I think that's roughly where I put that other contract on. And yet these guys are still fighting it and they're still fighting it. And they're trying to, we're getting very, very short. So it did just a little counter move. But in our view, I don't think, but if I'm wrong, I'll be out. I'll have a nice week. I won't have the huge week, but I'll have a nice week. Don't worry about me. Uh, you also are not to worry. You're not in competition with anybody. You're not out to beat anybody. You've got to get in your own silo and just get your own job done. Um, Trust me, our members, they don't really care what you do. They don't. They probably don't, and they don't really care what I do. I mean, they want me to do well. I want them to do well. But in the end, you got to play. And it's also our motto. You got to play your own game. We don't think that this is going to get taken out. But if it does, yeah, we could be up here and, I'll have a decent, I'll have a good week. I still will have done what my plan was to do with very few trades. But I don't think it's going there. But unfortunately, it's probably not going to be resolved today because the Federal Reserve is the titular head of a banking cartel. And when you hear the word cartel in America, cartel doesn't ring of nice people because we think oil cartel, bad, drug cartel, bad. Banking cartel. They might be the worst. It's intentionally ahead of a banking cartel. And if you didn't know it, I'm sorry to tell you this, the American dollar is one of our weapons. And it may not be backed by gold, but it is backed by aircraft carriers. It is. And it just is. It's the way it is for now. And, you know, we have our allies, we have our friends, and hopefully we all play nice. But for those that don't, um, it is what it is for the moment, for this, this chapter of world history. And hopefully it stays that way for our lifetime, my lifetime. It is what it is, folks. So we think that this is still now. If you had entered right here, you could have made 1,000, right? You could have. I'm going to go through and show you this, but I still think we'll see what happens. I still think that this bugger is headed this way, and I think it's going to do it before the week is over. And if it breaks this guy, then we will be down here at 58.28. And at 58.28, then the retail crowd are really going to come out. And then CNBC is going to tell you, well, it's really too late now to sell because, we're down, no, it won't be too late, but it'll be too late to buy the puts because the implied volatility could get really high. And that's, when we get down in there, then, Bag is going to be closing some of those trades, right? This trade, I probably won't, this specific trade, I probably won't carry it over another weekend. I don't think so. But that's the way it's looking at. Now, that may look like hieroglyphics to you, but it isn't. And it's very, very good. And the beautiful thing is when you are trading intraday with us during your Q school, we get a lot of practice because we trade on a much smaller increment, even using these same tools, and you get a lot of practice. When you're trading options, that's the challenge. You don't get as much practice because they take weeks and months to play out. Now, what I want to show everybody that's here today, this is the S&P. And these little red dots and green dots, these are called, they're proprietary to us, stock market counting. They're called C points. These little lines here are called ball markers, also proprietary to us. And we can trade all kinds of things. But what I want you to know is this dot, this red sell dot, does not show up until that brick opens. You see that right there? So that wouldn't have shown up until right there. So if you wanted to play golf with a 9 iron, you can play golf with a 9 iron. Gonna take you longer. I don't want you playing in front of me on a Saturday. I don't want to, spend 6 hours. Did you see where the pros took like 5.5 hours to play around? Kind of bullshit is that? That's ridiculous, right? I mean, I want to play 18 in 3 hours. Those pros that are taking that kind of time, that's absurd. I wouldn't put up with that. They need to do something with that. But the question is, could you have made $1,000? Each brick is 1,000. So if you went short right there and you just played for one brick, you could have. So there's one. Now the C point doesn't show up until right there, right here. Could you have made 1,000? Yep, just one. 9 iron. There's two, three, four, five, six. That isn't me. Abby, I know. That's Abby. Six. She's 1 year old golden retriever. Every day is there she is. She knows it's getting close to park time. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Uh-oh. All right. So here, and where were we at? 15, I think. We had 15. When you do this, you have to come out, you got to risk 2.1 bricks or $2,100. And this one, you probably would have gone in right here at the bricked incomplete and you came back up. Um, and you very well could have lost two right in here. But you would have made one here and you would have made them right here back. So you would have made about 15. This is over time though. This is over months. So the frustrating part of this, if you were playing that way, listen to that. I don't know if you guys can hear that noise. She just she knows. She know. They know. The Goldens know what time it is. And the next thing you know, Ted's gonna be in here kicking my arm. Um, he's 5 years old. I can hear it in my headphones, so it's noisy. Um, the frustrating part of this would be is these could be happening at night or it could be happening as you're driving. So you can program them to come to your phone, right? And you could be trading them more than a minute. You could do it with a micro, to prove your case. You certainly could. But the frustrating part would be you would have to have these programmed to be sent to you because you don't want to be sitting on your ass waiting for all these to come through. It would be really, really boring. And that's where we use technology to do that. The other piece is that would be really frustrating is there were some really ginormous trades here where you made one, but you left two, three, four, five, 6,000, one, two, three, four, you're leaving a lot of money on the table. And that's what's going to happen. I can only describe this to you, right? So when you're looking and you're looking up at this position, you say, whoa, shit, man, he was down 10.6 thousand on that trade. Yes, I was, but I have 18,000 in my pocket, right? I have 18.2 in my pocket. So, and I'm above my plan for the week, right? I wouldn't suffer that type of a drawdown if I was just starting my week. No, 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 I'm not going to do that, right? So, at the start of the golf tournament, if everyone has in this, where it's on the first hole, I'm probably not going to shoot for the par five and two and put myself in a hole. I'm going to play, Katie by the door. I'm going to get my legs, get things going, and then, try to get up above the field. And I might press a little bit, right? Press, but I'm not pressing with leverage. I'm pressing more with time. But that's an individual thing, and that's why we compare this to a sporting event because it's not a game to us. We're very, very serious about it, but it is a sporting event of sorts, right? But this would be like, quarterback sneak, quarterback sneak, quarterback sneak. But if you did this, say you did this for 3 months and you got 15, 6, 15, 20,000, in your trading account, maybe then, the next week you say, you know what, I got a little wood in the trade. I got a little more experience. Maybe I relax my grip a little bit and let the club fly a little, right? Don't in the beginning, you're focused on every individual trade and grinding on it. I hope if you've been doing this for any length of time at all, you're not still doing that. If you are, you need to stop and take a break and rethink what you're doing. I really mean that from my heart. I really do. You don't have to come to us, but if you're doing that every single day, I don't think that's healthy at all. I don't. And I did it, right? So I did it. And I tell the story in Q School. I'll tell it here. I back in the early 2000s, we have a program that now does this. And I told Susan what I was going to do in Q School. We tell you exactly what I was going to do, and I locked myself in her office, probably trading bigger size than I should have been for 3 months. And I was trading a 13-minute to 15-minute chart on stocks, good size, and I had about 600 trades in 3 months, about 600, which I thought was quite a bit. And I won on about 400 or so, and my net for the period was like about 75 grand. And at the end of the 3 months is so, well, that's really good, Don. That's what we're going to do. Nope, that isn't what we're going to do. So what? I don't understand. I said, Susan, if I got to do that, for the next 3 months or the rest of my trading life, I am going to be a blithering idiot because that was really, really difficult. And it was really, really tedious and just it was brutal. It was brutal. And I was making every decision to go in, every decision to go out. It was a grind. It was a grind. And so Susan said, "Well, what are we going to do?" I said, "Well, we're going to have to think this through." And that was kind of the kernel. This all didn't come together like in 10 minutes here. This came through from a lot of trial and error, a lot of mistakes, a lot of different things. And then we said, okay, well, we gotta, I said, there's got to be a place where I can program what we're doing here. And the thing of it is, there wasn't. And some of the platforms you're using today, you still can't do it. You can plug in this, you can plug in that, but you can't really do it from scratch specifically. And you can't automate. And if you're listening to us in another part of the world and you have designs on wanting to use our programs on your desktop, we'd love to have you, but you need to know if they only work on TradeStation, and you have to make sure that you have access to TradeStation and you have access to the same version that we have, because a lot of countries aren't going to let you do it. And a lot of brokerages here in the States aren't going to let you do it either. They do it, the banks do it, the hedge funds do it, but you're not doing it. No. At least right now we can. So, any case, I kind of rambled on there. Um, pretty boring here at the moment. We do want to see the close, so I'm going to let you watch, and if I have to close it, but I'm still not thinking we will. But I just if anyone's got any question, I hope you're not thinking that all of a sudden Don's getting really sloppy here. I'm not. It's just that I'm doing something that we don't ordinarily do. And okay, oh, I hate when this thing does that. Where's my, there it is. Okay. I don't know. So we dress up the screen um through Zoom just so it's a little bit more attractive to you. And I don't know why sometimes it just disappears, but let me see if it's going to do it again. No. All right. So that's kind of where we be. And another view, this one here, I do like to show this. Um, oops. Let's let me just do this here for a minute. This is so dang crazy here. Trying to, well, um, I won't mess with it. I won't mess with the screen. We'll give you a chance to watch this, but good to see you, Keiko. We are, I'm just letting everyone know. I know at the beginning of the year in January, we were on quite a bit, right? We were on at night, we were on during the day. And now, we're in the grips of, it's another year and we're fully underway. We have folks rolling in and out of Q schools now all the time. So, we will try at minimum, to find you all on live YouTube on Wednesday. I'm afraid it's going to be Wednesday midday, but do push the notification button because if we can punch up, we will, right? So I'm going to try to do it that way. If you have designs on taking advantage of the Q School, it can be anytime, but just make sure that it's something you want to do. If you want to chat about it, happy to chat about it. And just make sure that we're going to have the time available for you. And it could be, could be weeks, could be months from now. And it's on a first come, first serve, and we can pencil you in. And And if you want to get access um, to the on-demand videos in advance, I don't have a problem with that. We can do that, and you could have them for weeks. We've done it where folks have had it for a month or two, and then we connect for those 3 weeks, and you're gonna have probably even more questions, and we're gonna be together still the same amount of time, but 1 to 2 hours, ideally a day, and doing everything we can to help you get underway. Remember, the Holy Grail isn't Swing Machine. It isn't any one program. It's very, very good. It's very, very helpful, very helpful. But the Holy Grail is really you. It's each of us. Let's take a look at the Nasdaq on a daily basis. Let's go to the ES. So let's just change the ES. Let's go here. Oop, how does that? Why do I keep losing that? I don't understand why it's doing that. Um, that's Zoom. I don't understand that, but let me put this on a daily view. So on a daily view, she's still long. She's given up a lot of profits. But she's still on Swing Machine still considers the S&P on an uptrend on a daily. And she's right here, right here. Um, the 60-25 will be important. Let's look at the VIX. Where are we? Is the market proportional? So we're going to put that on a daily. And it is. See, this is why the market seems so calm right now, right? On a daily basis, the market, and this is all about the Fed, right? This is all about these damn hedge funds and their machines. The market is in balance. And the market is either trending really hard one way, trending really hard the other way, or it's going sideways. And when it's going sideways, which is the majority of the time, there's a lot of money to be made, but you got to really shorten up your trading, and you trade with somebody was mentioning your frequency. You trade with a greater degree of frequency, or you just slow way, way down, which I've taken the latter choice here today just because of what we did. So I won't belabor it. But with the VIX at 40 and the S&P at 60, it's locked in. It's proportional. So where do we prefer to place our trades? Where did we um watch this thing's going to go back. Why does it do that? So I click on the damn thing, and it comes popping back up. It's crazy. So when when the S&P is up here in euphoria and the VIX is down here in panic, what do? We sell. Machine sell, we sell. It won't stay there for about be a matter of hours or a day or two. And that's where it was on Friday. Do you remember? On Friday, the VIX was at like right in here, wasn't quite, and the S&P was like it was just coming out of it had been, it was just doing that. And I'm like, oh hell, we need to stay short over the weekend because we very well could gap down, and gap down we did. When it's reversed, now the other piece that we had, well, I'm not going to put it in, not only did we have the VIX in panic, not only did we have the market in euphoria, but we had the S&P skew at a record high and I just said it's like turning a light switch on in a room full of gas. But boom, it's not going to stay. And we may not have the exact same programs that they have, but we're a hell of a lot more versatile than they are, and we know what they're, more or less what they're doing. We know what they're doing, and 90% or 95% of these markets, and they've been this way for decades, are all machined. You know, they're all machined. The other thing is, I mean, I don't know if we got any brokers out here, but they're gonna, if the Federal Reserve is going to be going going out of here in 5 years, my view, because of technology, brokers and brokers are going to be going the way of the buggy whip. I mean, they're not going to be around. It's going to be all machines. Now, there'll be people behind the machines. Trust me on that. They're in school now. They're in school now, but they just don't have any training experience. So, but they will, they will. Um, so if we're going to go the other way, let me show you. If we get into now it can take days, or weeks, or sometimes months when the S&P gets down in here and the VIX gets up in here. What's going to be happening? And the market is making lows. The market's down like 30%, 35%, 40%, and everyone's puking and panicked, scared shitless. And we see, and then on top of it, we see the skew underneath 120, 115, 110. Then what do you want to do? You just want to buy. And that's exactly what we saw after the COVID debacle. That's exactly what we had. And then you just buy it. You can buy anything, buy everything. Just that alone. The problem is, or the challenge is, if you join today, you may have to wait. You may not get that trade for 3 months, 6 months. I don't know. On a position basis, that specific trade, I'm saying that specific trade. I'm not saying that you can't trade intraday. Intraday you can get, but if you want a big fat, you want to know when you can come in with a big fat pitch. That's the one we want. And we may only get that look a few times a year, but that doesn't mean we only trade a few times a year. We trade around, right? Trade around some of this, but that's the fat one we want. And it was there, on last Thursday and Friday. I was trying to, I think Keiko, I think you heard me. Jay's thoughts, you heard me. I think it flies, it dies. I think you heard me, right? Our members certainly heard us, right? Now, I do understand, you shouldn't be taking, please don't beat yourself up if you shouldn't have taken the trade on my voice or on anything. You shouldn't. You should just take a mental note of it and, on paper or something, and then say, okay, well, hey, maybe I need to learn that. I mean, learn something. And I don't think you should be taking a trade off of anybody, including me, take them off the algos. Um, but and I like to listen to some of the podcasts. I'm not going to do anything with my money based on what the hell they got to say. Certainly not Tom Lee. You see that fool on CNBC? Doesn't he look like a dork? The big black glasses. They always change banks too. Like they keep the person there, and then if you ever noticed on the bottom, I think the guy's worked like 20 different banks. It's absurd. They just, and before him there was others. This whole Wall Street, Madison Avenue thing is littered with, these people, right? The guy, from the dot com, and I'll shut up with this, but the guy from the dot com was a guy by the name of, oh, what was his name? He founded Business Insider. What was his name? Somebody gotta know. I gotta look it up. I can't. But he was of the day of the dot com who founded Business Insider because he can't trade, right? He blew himself up, his credibility. Insider. Um, yeah, there he is. Henry Blodgett. Henry Blodgett. Well, back during the dot com, when many money managers today weren't even born. I mean, we got some in their 20s. Henry Blodgett was the big, tech guru of the day. Oops, I just do there. And let me open this back up. And oh, he was touting everything. Now, it was all a big bubble. It was all a big scam. just kind of like, Bitcoin and crypto. I'm sorry. I know I probably offend some people on that, but it is. And you're going to learn that, there's always a faster chip or better technology. There's always something. But but he was touting everything very, very late in the game and became a CNBC staple and everything. Merrill Lynch ended up hiring him. I'm like, what are you guys doing hiring him now? I had funds at Merrill. I'm like, good God. But books were written about later that he was, touting the stocks and turning around and selling behind them and ridiculing the people and stuff. He got sued and all kinds of things, and then he got banned. I don't think he, for his lifetime, I don't think he can manage any money. And he goes off and he founds, Business Insider. But, is Tom Lee as bad as Henry Blodgett? Probably not. But there's always, during all of these bubbles, um, there's always that. It's, whether it be Tom Lee, Henry Blodgett, who's the guy, all the crypto pumpers and stuff. It'll be littered. It'll be littered. It's, seen it all before. If you've seen the movie Wall Street, Matt McConaughey, and there's that scene he talks about, it's like pixie dust, the parade comes to town. That's what he means. We're all buying AI. Yeah, the parade comes. Woo, we're all making money. Now, this isn't us, right? This isn't what we do, right? But that's what Wall Street and Madison Avenue do. It's one and the same. And then the parade leaves town. And then there's another parade. And there'll be something else. And they're professional asset gatherers. We don't gather anyone's assets. No, I'm not going to do this for you. Not going to manage your money. Don't want your money. No, if you want to learn what we're doing, I'm going to share it with you. I'm going to share the tools with you. You can learn to trade your own game. And I sincerely hope that you are like others. Not everyone gets it, but we got a pretty high success rate. We've been doing this a while, but it will come down to you. And if you get impatient and over leverage or get into a trade and like, oh, it'll come back. No, it won't. No, it won't. They'll get you. They bank on that. I don't know why it's doing that. That's a function of Zoom, not TradeStation. But any case. So I have a level. I'm not going to share it here on YouTube, but I have a level that represents my weekly goal. And if I can weather through that level on the close, then I'm going to continue to hold overnight. And if I can weather it through, I'll be holding it on Friday. If not, it'll stop itself out, and I'll have a very fine week. Will I have caught the high water mark on my account? No. Am I going to beat myself up over it? No. Nope. Nope. Do it too many times. We don't get the very high. We don't get the very low. And if you're trying to do that, you're going to be with Davey Day Trader. He didn't look too good. He did not. Any questions, let us know. I'll let you watch right through to the close. Let's see what they do after 4. The public markets close at 4. The futures markets close at 4:15. Then they go take a leak, literally, for 15 minutes. Then they open back up at 4:30. And then they um, square away their books for half an hour. And then they close at 5. And then the partners, head out the door. They're probably already out the door. and they go into scores or the strip clubs in New York, and they hand it over to the young kids and take their accounts overnight for them. And that's probably pretty much their routine. Are you going to do better trading during the day, during normal session hours? Absolutely. Can you trade overnight? Yes. Yes, you can. Probably easier to do it with machines. You're not going to be, I don't think, on balance, over successful. I see somebody, I don't know how or why I get hit with these ads. We don't really advertise, but there's some kid out there saying, oh, all you have to do is trade overnight, and all you have to do is make $800 for 4 nights a week. And yeah, okay. Yeah, just like that. And you'll make more money overnight. No, that's not necessarily true. No. I mean, it's possible, but you're going to do better during normal session hours. And the brokerages know that too, and that's why they give you the margin. And they should know, I mean, they know. Now, the challenges on YouTube too, in case we got folks that are coming by, this is a trending strategy, the 5 minute NQ, and we've gone through a couple of times. You're probably saying, "Well, Don, you're long on the 5 minute." Yeah, but I have a lot of wood in this trade, and we're trying to do something a little bit larger here because of the significance of the move on Monday. We may get away with it, we may not. But when we're trading, going after the trend, you have to have more time available. And that we can't always show that on YouTube, right? It may take several hours for the trends to play out in those win-loss ratios to um, square away with the profit factor. I mean, because we're going to be losing 7 out of 10 times. So if we have somebody that comes in and it isn't that they have the attention span of a gnat, but they have an expectation that they only want to trade for an hour a day. I'm okay with that. I am. It's just that you're not going to be able to trade this strategy for an hour a day. It won't work. It won't. Um, but we have other strategies that could work, right? And we would get you, if that's what you have, then we will, get you working with those strategies. So you have to kind of know, right? And that's where if you're ever listening to anyone trying to get an understanding on something, you might want to ask them, if they're giving an opinion on a stock or Bitcoin or something, it's like, well, what is their interval that they're looking at? You know, if it's that guy who's the pumper who owns MicroStrategy, I mean, that guy plans on, dying with it, right? So he says, I'm sure it's being hedged, but somebody else may be only looking, at a very short period of time. And so you kind of, you should know. And when you choose your strategies here that we equip you with, you need to know how to work them and you need to define, um, well, not the market, but the interval, how fast you want to run them, how slow do you want to run them? That'll be your call. So I think, the next time that we connect from a trading point of view might be Wednesday of next week. And if I come up for about an hour, what I'll try to do is have the account balanced out and, at least the starting point for that hour. And we'll trade just for an hour or less and see how we do. No, we're not gonna make $18,000 in an hour. It's not likely at all. Um, but we'll see how we do to show you. That sound okay? The Fed will look at this as a success if they can get off the stage, get the market closed without it screaming higher or screaming lower. From their point of view, it will be a success and they're gone. Because if the market crashes on Friday or goes on and takes those out, they'll, the stock pimps will blame it on something else.
I got a real quick question for you. Are you a conspiracy theorist?
That is a pejorative, Senator, that's applied to me, mainly to keep me from asking difficult questions of powerful interests. I was told that I was a conspiracy theorist. That label was applied to me because I said that the vaccines, the COVID vaccine, didn't prevent transmission and it wouldn't prevent infection, when the government was telling people, Americans, that it would. I was saying that because I was looking at the monkey studies in May of 2020. I was called a conspiracy. Now everybody admits it. I was called a conspiracy theorist because I said red dye caused cancer. And now FDA has acknowledged that and banned it. I was called a conspiracy theorist because I said fluoride lowered IQ. Last week, JAMA published a meta-review of 87 studies saying that there's a direct inverse correlation between IQ loss.
All right, so I'm going to assume
I could go on for about a week.
Is there any one of them that you can say, you got me? That really was a conspiracy theory? Or are you in a position to submit for the record? I think it'd just be helpful for every one of these narratives for you to submit that maybe for the record.
These are just excerpts of the
Amusing, isn't it? Senator Pocahontas from Massachusetts, my old, home ground. I left that state years ago as a college kid. Hasn't changed much, has not. And I was not a Kennedy fan then. I'm not particularly even today, but RFK is dead right. And Pocahontas is no more for the little people than than the man in the moon. But that wasn't Pocahontas. She was getting into it earlier. She wanted RFK to promise that he wouldn't sue the pharmaceutical companies. Never should have been done. They never should have been, the liability never should have been taken off. But in any case, we'll see. There's a change afoot. I'm not out to, when we're trading, change anyone's point of view on anything. I'm not. Um, I'm a realist. I'm a realist when it comes to just about everything, particularly in the markets. Not out to change a point of view. You can have whatever point of view you want, um, and you can believe whatever you want to believe, including about the markets. And you can do whatever you want to do. We're very open on our thoughts about what the markets are, how we approach them, what we want to do. If that resonates with you, invite you to visit the website. If you still have questions after you visit the website, you're welcome to call me. I'd rather you look at the website first, though, because time, we can't buy it, we can't sell it. When someone calls me and says, hey, what about this? What about that? And I ask, have you looked at the website? And they say no, then I kind of then, I'll be honest with you, I kind of then question, does this person have the initiative? Does this person have the wherewithal to problem solve? Because you're going to have to do some problem solving of your own. This is a mentorship, not an apprenticeship. There's a difference. So you're going to have to, as a trader, you're going to have to get in there and problem solve on your own. We can help around the edges. We can always give you something to look at, but you're going to have to do it yourself. But I'm not out to change anyone's views. And so if trading in this markets, if this annoys you, we have had some people say, hey, take me off your mailing list. You're pissing me off. I don't know. I took it kind of as a good way. I think he was just like, I don't have the money and I don't have the time, and I'm getting pissed off to think that there are people out here doing that. Like, okay, fine, I'll take you off. The emails are meant to, and the videos are meant to be inspiring, not annoying, right? But we're not out to change anyone's point of view at all, right? And in fact, I approach this as the markets that I am the most, not the dumbest, you know. Um, Susan's got a Mensa level IQ, as I've said. I married up. I know that from heard Susan's days at IBM. In the old days, they probably can't do this today. I interviewed with IBM. They would have me back in the day. IBM was the Google, and Susan went to work for IBM. We found out later because then they sent our paperwork and said, by the way, you need to score to like, I don't know, 160 or something on her IQ and you're entitled to be in Mensa. I'm like, what the hell was all that about? I didn't know. I didn't know that test they gave me was an IQ. So I never got to work for them, but Susan did. So she's very, very smart. Um, very, very good at math. Um, but I will arm wrestle you for the right to be the most ignorant person here today, every day in these markets. I need to be. I need to be. Because if I need to take a signal and move left or right, I can't have a preconceived, or at least too many of them, and not out too far, notion of anything, or certainly anyone else's opinion. And when the markets go down, the noise level always picks up. When the market's going up, it's everyone knows what it is and everyone's taking credit for it, and it's kumbaya, everything's great. But when the market's going down, a lot of people are angry, a lot of people are frustrated, and there's all these competing interests of why it is, and they're trying to, and a lot of noise. That's when you really have to put your headphones on, even from me, and just react to the signals. There was a gentleman here, I don't see him here today, but he was here the other day when the market was gapping down 200 points on Monday, and his first question was, why is it going down? The only thing I can point out to you on that is that that's the rational side of your brain trying to figure out something that many times is irrational. So it is what it is. And you can either, but if our approach resonates, give it a look. It's not for everybody. That's kind of why we don't advertise. I live in Florida, I could go to the state fair and this convention, that convention, set up a table and show swing. We don't do that because the reason being is this has to be something you really, really want to do. And Keiko's been shadowing us for weeks now. Jay's thoughts have been shadowing us. Netfly's been shadowing us. I recognize Tina's been shadowing us for months and months. May not be here today, but when I see that, I know that that person's like really, really interested, is really, really trying to figure this out. Not so much what's in front of us here. You can't do that. Swing Machine has over 800 lines of code. It does not use moving averages, doesn't use stochastics, doesn't use MACDs and everything else. Um, but um, but you do need to have a passion to want to do this because it's the passion in doing anything that'll get you through the tough times, right? And there's tough times in everything. I mean, there's always, um, we're having a tough time on this particular trade. We're having a good week, right? And we're fine. I've tried to take the time to describe that. Um, but I mean, we're doing fine. So as long as, whatever it is you're doing, if it's getting you, done, it's getting you from point A to point B, and you're getting done what you need to get done, don't change it and just keep doing it. As long as you understand it and as long as it's working for you, then keep doing it. But if it isn't, then you want to stop. You want to think. You want to look around. You want to think some more. Take your time. Think, think, think. And stop acting. Stop throwing contracts around. Stop throwing options around. Stop throwing shares around. And certainly don't be throwing chairs around like golf clubs. Getting angry isn't going to help things. It isn't. And it should be a source of hopefully a source of challenge and pleasure. For me, and I've described this, I hope will be this way for you. It's almost meditative. My office is very quiet. Um, I give things like an occasional glance. I listen to, the news of the day, which I like. I like the history and I like the political scene a little bit, a little bit. But I like to read, I like to listen to some music, and I like to take the dogs to the park. Pretty simple life. And it's fairly warm now. Finally, it's about 72 degrees here. Finally, in Tampa Bay, we had our hopefully the end. Our winter is over. Last week was nasty. All right, so we're gonna let you watch. I'll keep this up right until 4:15 because we might see a little break, and then tomorrow's Thursday. We're very swamped. Outside chance that we punch up on Friday, maybe. And then otherwise, though, I think on Wednesday of next week we can punch up. And when we do, it will be with a program that we're going to start with you. The machine will be trading. It's going to trade for an hour or less. We're going to make what we make. We might even do it with a micro, right? Just to show, just, to see what it looks like. Enjoy. Thanks. Thanks everyone for coming by.
And Mr. Kennedy, I look forward to working with you.
Thank you, Mr. Chairman.
We're adjourned. And Mr. Kennedy, I look forward to working with you.
By the way, if you haven't read RFK's book on the COVID deal, it's kind of it's a technical book, hell of a write though. The guy is smart as shit on this stuff. He really is, and it's wrong. I mean, it looks like he's going in, and this really, I don't know if there are folks outside the US and stuff, but there's big changes coming afoot here. Really big changes, and it's moving so fast. And it's great. It's great. We're very, here personally, I think it's fantastic. And the young people should be excited about their future. There's going to be incredible market volatility. There's going to be a lot of societal volatility. But the United States is moving toward a meritocracy or back toward a meritocracy. And Bagadon couldn't be happier about it. What we went through, what we've been going through for the last, 10, 15 years, I think is comparable to the dark ages. I mean, it's just, I think the young people today, when they're 40 and 50, will look back and say, what in the hell were you guys thinking about? What were you talking about? Um, but it's changing and it's changing fast. I always had confidence. It wasn't one person necessarily. It isn't just Trump, but I always had confidence in the American people in the aggregate, and they're getting it done. Thank God. I think if the markets, well, as they say, K. John, if it doesn't repeat, it certainly does rhyme, right? So it does. It goes in cycles, and it can swing, and it is swinging. Um, I think if the markets they've certainly been democratized, right? Because this technology is now available to you. And when Susan and I, it was in the early two, you couldn't do this before 2000. You couldn't. It was too expensive. The technology wasn't there. You couldn't do it. But it was right after the 2000s. And I said to Susie, I'm like, Susie, it's here. We can do this. We can do it. And you can do it today. And there's not many people that are really doing this. I don't know why. They're just too busy doing other shit. That's just fine. It's totally fine. I don't think I'd want everybody doing this. I think it might make it a little more difficult. I don't know, but it's available to you. It is. But you can't do it at every brokerage. You know, you can't. And you can't do it in every country. But I always thought that if the markets, if people, and see, the other thing is in the year 2000, in the late 1990s, going into 2000, the trillions of dollars, there was $3 or $4 trillion in retirement money, and that money was actively managed, maybe not by individuals, but by mutual funds. Active money managers making active decisions about fundamentals and valuation and yada yada. That was probably a good thing. Today, it's just the opposite. There's still another 3, 4, maybe 5 trillion, and that money is put into passive funds. It is not actively managed. The young people today that put their money into these target date funds, there isn't a spit's worth of difference between the target date fund that expires in 2030 versus the one in 2055. It's simply you send us money, we buy stock, you take your money out, we sell stock. And that passivity, that ignorance to what's going on in the markets, I think is a loss. I think the markets should be reflective of fear, of greed, of good decisions, bad decisions. I think not just fear and greed, but it should be reflective of what we're doing as a country. And it isn't right now because it got hijacked. It got hijacked by these people. And, none other than Ben Bernanke, who launched this quantitative easing bullshit that was done in Japan in the 1990s. Please go watch the video, The Princes of the Yen. That's where this shit came from. I think he did it just as a stopgap measure, but the bastards, the political bastards, they bastardize everything and they decided, you know what, we can just do this forever and just enrich the hell out of us and steal the country blind. And that's what they've done. And thank God, there's going to be very, very rocky. The Secretary of the Treasury under Trump has said to get done what needs to get done is going to be like flying a 747 at night, refueling it at night during a Cat 5 hurricane. That's how difficult it's going to be for them. It's going to be rough. What does that mean for us in the markets? It's going to be volatile. What does that mean for traders? Great. What's it going to mean for somebody who is close to retirement, sitting on IRA accounts? It's going to be stressful. It's going to be, they're going to have their vomit bag out. They might vomit and they might, break their neck on the overhead. It's going to be a rough ride. But we've been doing this for years, preparing, getting done what we need to get done day in and day out and be ready for whatever's coming down the pike. I'm not going to be vomiting in a bag, not me. Our members won't be. Nope. Nope. They were working. This is what they do. So you got to ask, what do you want to do? Some great books. When you mention history, if you haven't read the Madness of Crowds, it's an old book about bubbles. You can make good money in bubbles. I'm not saying you can't. You can, especially if you're early. So the Madness of Crowds. There's a history there. The Creature from Jekyll Island on the Federal Reserve, where it's Federal Reserve Day. If you don't want to read, it's about 800 books you don't want to read. It's kind of a lost art. You can find them in these buildings called libraries. I'm kidding. I don't know. Do the kids even go to the libraries anymore? I don't even know. I kind of doubt it. But if you want to watch the Cliff Notes, there's like 12. Watch the Cliff Note. It's about an hour each from the author himself. I forget his name, but And but watch, it's a little dated, but he reads really well and it tells a story. It's a great story, chilling story. And it's long before the crypto kids. The crypto kids think they just found out, what's going on. I mean, kids get news for you. Life begins before you. It began before me. A lot of times history only begins, K. John, with when someone's born, right? They think that's the extent of history. No, there's been people before us doing, trying to do the same stuff, um, motivated by the same things. Creature from Jekyll Island, um, the currency books by Jim Rickards. I wouldn't listen to him from a trading standpoint, but Currency Wars. He's got a. It used to be a trilogy. Now it's like five or six of them. You want to read them all. Niall Ferguson, Harvard professor. Don't like his politics, but pretty good economic historian. And he wrote a book called The Ascent of Money. The history of money. Where does it come from? What's it all about? How did all this start? How did capitalism start? Well, it's always kind of curious, you're not going to learn that from some Marxist professor at Princeton. I mean, maybe you do at Princeton, but not at some state college. That ain't gonna happen. Um, and what other books? David Stockman, The Great Defamation. Um, there's a female. DiMartino, don't, she's okay. I don't like her market calls, but she's got one on the Fed, which is okay. But there's another one, The Forgotten Man. I forget her name, by a female, The Forgotten Man. Big book, excellent book. So it's economic history. I like that stuff. But I don't buy or sell based on any of that. So if you're looking for some insight there, um, mm, I don't know what to tell you. We just track the money flow and keep it simple.
Try something. Get here for a second. Okay, so what I'm gonna do is I'm just gonna pull his.
Oh, you want to hug again? I'm all about that. All about that.
So what I'm gonna do is I'm gonna pull his head down. Like that.
What about my hug?
Another head.
Oh.
So I went to Africa and was working on giraffes in Africa. Completely different experience. And they were 100% wild. They were getting darted out of a helicopter and we were relocating them. Okay. Okay.
I get that it's for the good of the animals, but
It's hard. Yeah, it's really hard. Okay. Okay. I'm done messing with you.
K. John says, if you ever want to seek a sideline gig, audiobooks, voiceover. Wow, thanks. I'm not so sure. I can't stand to listen to my own voice. I've lost quite a bit of the Boston accent, but well, thank you. Audiobooks, I do like. I do like audiobooks. Um, it just saves a lot of time, right? Because I can be doing other things and listening. So I do like that. Thank you, K. John. So let's see here after 4. So they put to bed the public markets at 4. So tonight's headline will be Federal Reserve. I'm guessing, right? I have not looked. Federal Reserve holds interest rates same, data dependent, economy solid, great. And all they want to know is, how much is the Dow? Oh, the Dow was down a little bit. The S&P was, okay, great, we're fine. And the Fed is happy with that. Now we'll see what the traders want to do between now and Saturday, this weekend. I think they're going to want to take out those lows. That's what I think. Um, and so we trade intraday, but these other traders who got billions, they got a different job. I mean, if I had to manage those billions, we'd have to trade. You have to trade those differently. You can't trade that much money intraday. Even Jim Simons, the greatest trader of all, better than Buffett, he even said you can only grow so big. When you're trading intraday, you can't, so it's not, I don't think it's going to be a problem for us. Um, but they need 90 days to get in and get out. That's what it takes a money manager, who's got hundreds of millions, maybe billions. It takes them a good 90 days to build into a position, build out. They just can't get out, get in. Many times by charter, they have to be in, right? But we can be around them. But at the end of the day, hate that phrase, but at the end of the day, the end of the week, and I'm not using it as a cliche, I'm using it as to dramatize a point. There is a person behind the machine, and he knows how his trading account is positioned. Is he comfortable being long? Is he comfortable being short when that head of his or her hits the pillow that night? On Friday, said to everybody, I am extremely comfortable. Well, thanks. I was extremely comfortable being short over the weekend. I did not know for sure we were going to gap down, but I was very comfortable. I would have been uncomfortable if I was long. So you can learn a lot by the closes of the day and of the week. I think when a market is in a corrective mode, and when the bears are frisky and gaining control, many times going into a weekend, they don't want to be long. They might want to be out, flat, or maybe short or hedged. When the market's really bullish, balls to the wall bullish, they don't want to be short. This weekend, I think they're going to want to get out. And I think it's interest rates. I do. I do. I think it's coming home to roost. Chickens coming home. Now we're also got earnings, right? So we may have had some earnings just roll out here and they're not liking it. That could have been, I don't know, is Apple out? Somebody's going to have a beat on that. Something just came, is pushing this NASDAQ around. So we're still getting earnings. We can punch it up. Let me go look. I can tell you who it is. Why does that damn thing do that? I hate that. Let's see. Push up. All right, let's go look. The NASDAQ. Let's see here. Oh, we got Tesla. Tesla came out. She's down 25 bucks. So they're not digging that. Tesla. Let's see who else we got with the earnings. Yeah, it's Tesla down 25. Now, is this Tesla or is it the interest rates? They're going to say it's Tesla, not the Fed. That's where they're going to put it on. But I think it's the Fed. I think it's interest rates. And I think Tesla is off because of interest rates. But you know what? In the scheme of things, it doesn't really matter, does it? Yeah, you're right, K. John. Yeah, it's Tesla. Now, I prefer to play options after earnings, not in front of earnings. Most retail traders want to play in front of earnings. I'd rather play afterwards. I wouldn't play Tesla tomorrow. Um, I'd let her follow through and then play it. And we got machinery to give us not just the best option plays, but also tell us how the options should be configured. Options have an options formula, and we use that formula to tell us that. And if you're not, I think you want to look at that first, then maybe look at a chart. But retail option traders usually go to the chart first. Then it may not even consider the option formula. We do. And the machine does it first, though, right? Doesn't get every single one right, but gets some beauties. One of them happened to be Tesla. The Monday before the election, we had a gentleman in Q school and on that trade. So the market will close at 4:15. Now at this hour, if you're holding the NQ short, you got to have a minimum of 24 some odd grand. You got to have the full margin. The full and then, the maintenance margin. During the day, you only have to have 10% of that. Now, just because they give you the rope to hang yourself doesn't mean that you should use it, right? So we use it very, very professionally, very proportionately, very respectfully, very much so. And, I've had more than one member say, "Oh, come on, Don, I know what you do. I know you do. You come in and you load up the juice and you put, no, I don't. I don't. I could, but I don't. No, don't have to." Let me put this back to a 5 minute. Let me see if I can do that here without messing up the Zoom. Oh, there it goes. Crazy dang thing. But let's put this back here to a 5 minute. I'll put this back to a 5 minute. You can go down to 1 minute. You can go down to seconds. You can go down to a tick count. So you could put on, 500 ticks or 800 ticks. In that instance, a tick would be a transaction. Sorry. So this broadcast on YouTube will close at 4:15 with the futures. And so in advance, K John and Keiko and Jay Storts and Julian and if it flies, it dies. It flies, it dies. Um but not from Tesla, Meta and software, Microsoft, do they have earnings too tonight? They might. We're in the midst of that. So we thank you for coming by. Again, any of this resonates with you, isn't our only tool. We have about 65 or 70. We have so many more being developed as we speak. Many of these, not all of them, come from Susan and I. Many of them, or at least some of them, I don't know if it's the majority, but at least many, um, come from members who have asked for this or that. And so we don't throw anything away. The some will come in and out of favor. Swing machine is kind of ever present no matter what we're doing. We always like to keep eyes on it, but it isn't the only thing. And we like to trade point and figure, Renko, line break, all kinds of different ways of looking at the price action. And we love these radars. But we do use charts, right? We will use charts, and the machine can put trades in and out on its own, and we can intervene with that. Um, what we're trying to do is help you get a better outcome. We're trying to provide you some tools. We're trying to provide you the support. We're trying to provide you. It isn't a community. It's not a trading room of folks hooting and hollering. I made so much. In fact, I don't. Sometimes I hear that. I'd rather know the profit factor. Other people want to know the profit factor. Profit factor tells us all that we person needs to know. And so we have certainly had folks with profit factors, a weekly profit factor of over 90 and 100. And if you know anything about a profit factor, if the person lost $100, that means they made, 80 would be 80 grand, or 100 would be 100 grand. I'm sorry, 8,000 or 10,000. If they lost $1,000, then it would be 80 or 100 grand in a week. Have folks done that? Yeah, they have. Yeah, they have. Profit factors of that high. So how much money it was, I don't really know. Don't need to know. Doesn't matter. It's how we keep score. We don't keep score on the money. Okay, everyone, it's 4:15 and might be one or two trades going through, but that's it. Um, no big deal. Let's see what they do the next couple of days. Let's see how they end the week. We're going to try to stay put on this, right? Because we got so much, we got fortunate. We caught a nice big fat gap down. Why not? I don't have to work that hard. I mean, those one or two trades, put me above my plan for the week with room to spare, so I can slow down and I can, you know, I'm having the draw. I don't like it, but I'm still well above my plan. I'm gonna be at minimum on plan for the week, and it'll be what it'll be. So if you see this market selling down, you can rest assured I'll be on it. And now my account is off of its high. It was as high intra evening, or it was over Monday night. It was up as much as 54. So it is what it is. Maybe I get there again. Maybe I don't. Maybe if all hell breaks loose next couple days and we take out those lows, maybe I go to 60 or higher. Maybe. Have fun.